So we're going to kickstart this conversation with a very powerful fireside chat between two guests with close view of the Indian startup journey. From how do startups get funding to understanding what different markets look like. But the real question, how are companies built that grow and last long? Please welcome Karthik Reddy, co-founder and managing partner at Bloom Ventures. He was one of the pioneers who believed in the Indian startup potential and also build that ecosystem from the ground up. Please welcome. We're also joined with Shailesh Chitnis, who's a global business writer at The Economist. You might have read his groundbreaking articles covering tech and innovation. But did you know that he's an entrepreneur himself? He's offering us today a very nuanced understanding to business building. Welcome both of you.
Thank you. Thanks, Karthik.
Thank you, everyone.
Okay, good. So with that, let's get started. What I thought will be useful is Karthik has a wealth of experience in terms of investing in Indian startups, working with founders from a very early stage. So I think it'll be really interesting to kind of go through a journey with Karthik, understand his views on kind of Indian startups, and then maybe get into some of the really difficult questions. Hopefully not too difficult, Karthik, but let's get started. So to kick things off, Karthik, I think it'll be useful. You've been with Bloom. I think you guys founded Bloom almost in 2010.
Yeah.
So it's been 15 years now.
Yeah.
And so you've been associated with India's startup ecosystem for that length of time. So my first question is, how have you seen this ecosystem evolve?
Yeah.
What are the changes you've seen? It's really kind of a step back type of question.
Sure. Shailesh has given me such tough questions like a typical economist journalist that I am going to refer to my notes once in a while because I did make notes and I didn't want to miss out on the quality of the questions and giving my best answers today. So a very quick recap, I think for folks who might be too young to remember or, were not in the ecosystem. In my opinion, Shailesh, even pre-2010, everything had to be redone after the dot-com bust. Mm-hmm. So most funds and entrepreneurs who pre-2005 were wiped out. Surprisingly, people like Sanjeev Bikhchandani, Vijay Shekhar Sharma, Ashish Hemrajani of Book My Show, they all, Deep Kalra of Make My Trip, they all existed pre-2005. So they somehow survived. Yep. And then came the first reset of Indian venture in 2005. So if you see all the popular names right now, Sequoia, Matrix, Axel, they were all almost acquisitions into India. Okay. Like, they came and bought a team in India because they thought India is going to be the new frontier. Mm-hmm. And it took 10 years. And I think it took this gentleman called Lee Fixell to come and infuse an injection of, enthusiasm and just boldness at a scale that nobody had seen in India until then. We were very conservative. We used to back IT service plays and still, that's not venture in the Western world.
Sure.
So the first boom, I would say, was replicating what would be naturally internet first. Take classified businesses, take travel, take commerce. And when Lee spotted that, hey, Indian entrepreneurs seem like good enough that they can build the Amazon of India or the Uber of India, is when he backed Ola and Flipkart. Yeah. And this was all 2011, 10, 11, 12. So first thing, e-com boom. Tiger cloning what I call China cats, right? So he had seen success in JD, he wanted an Amazon, Flipkart in India. Then 2014, if you recall, Alibaba goes public. Yeah. And Masa comes into money. And he says, if China made money, then India should also make me money. Mm-hmm. And Masa, Lee once told me in a meeting, I was in New York when he wrote these two big checks for Snapdeal and Ola. In 1 month, he wrote $1 billion. And he said, this guy just did what I did in 5-7 years. He did it in 1 month. Yeah. So that changed perspective again. Mm-hmm. And the boldness of what scale is possible in India. So Masa and Alibaba followed. Mm-hmm. Masa became a proxy for Alibaba. Naspers became a proxy for Tencent. So the Chinese money came in for 5 years. So if you actually look back, pre-pandemic, we got tense with China, post-pandemic. But pre-pandemic, there was no curbs. If you look at 30 of the unicorns pre-pandemic, the Chinese were in 18 of them, right? In some form or avatar.
Yeah.
So I call that like the China wave. Somewhere between 15 and 18 is when India sort of self-confidence in building digital infrastructure came to the fore.
Okay.
I think it was a very important phase. So it was a multi-factor coming together, and not just a trifecta. It was Jamstack, Jandan, Aadhaar, mobile. Kudos to Mukesh Ambani for whatever opinions we might have of him. He changed how India operates digitally.
Okay.
Without him, I think we would have still been a little bit more in the dark ages. And you add UPI to that, and then it just exploded, right? So I joke to a lot of people that if the pandemic had happened Feb 2020, but what if it happened Feb 2016? I think we would have looked truly like a third world country. Because UPI wouldn't have been there, Geo wouldn't have been there, Aadhaar wouldn't have been there. How would we have administered the scale of commerce, vaccination, low-cost telephony? Like I was consuming 120 gigs of data a month through the pandemic working from home, right? That would have cost me ₹1 lakh my old Vodafone plan in 2016. I managed all that in ₹800, tethering my phone to my laptop. So that was the kind of transformation. You just have to put this in perspective. I still pay ₹800, ₹1,000 for my plan. I used to pay 4,000 on average, 2016. So these are very important, crushing. This is what makes a venture ecosystem come alive.
Yeah.
And it's important for India to involve 800 million people, not just cater to 80 million people.
Yeah.
Right. Then I think finally, just to round it up, the second, when you finish a cycle, like, people have, this better than most others as a journalist. Economic cycles typically, strangely, are about 7 years old. They always run in those cycles. And currently, in 2018, you saw the first cycle of venture having played out from the 2010 time frame. So new managers, spin-outs from old VC firms, for the first time, second time founders, people who had built $100 million of category scale at Flipkart, who had built 40 cities in Ola, suddenly were in the market as new entrepreneurs. And they were the entrepreneurs, not kids who came from Wipro or Infosys anymore, or Google, which is what we found in 2011. So huge transformation of both entrepreneurs and new venture firms. And the capital funnel started getting better because there were new Series B firms, Iron Pillar, A91, new Series A firms, new seed firms. And just to give you the endpoint of that, Bloom and 10 others existed in 2015, same date if you had met us. Sub $50 million funds.
Yeah.
Today, guess how many there are? About 175 plus.
Sub 50 million.
Yeah. In India, just catering to India. So that's the scale at which the funnel has grown. It went like this, now it's growing slowly like this. Then COVID, I think, was the true digitization equalizer. I think it was a wake-up call to Indian enterprise saying you can't be lazy, throw people at the problem, start digitizing, bring costs down, become more competitive. That happened. And the mother of demonetization happened at post-COVID. Demonetization was, in my humble opinion, sort of a rushed experiment. Didn't do anything to the cash position. But people were forced to behave that way for 6 months after the pandemic shut down. And so suddenly we went to a digitized country and overtook China without anybody knowing in the number of digital transactions in 2020-21, right? And so those are fascinating times, in my opinion. And I think today, summary, we are in a post-pandemic bust in venture. EdTech crashed, other things crashed. But today we are seeing Quickcom and AI and these waves kick in. And finally, there's a tempering of like what actually creates value in an ecosystem, which is IPOs and profitability. And so this year will be a record year for IPOs again in tech. And I think this is a trend line that's going to continue for the rest of the decade. I think we're reaching a state of equilibrium and picking up on our third cycle. So 2011, 2018, 2025 feel to me like natural cycles. There was one before that, but I think it was like haphazard. In my opinion, and conveniently for my sake as well, it just mirrors my 15-year journey.
Got it. This is pretty amazing breakdown in terms of how you've broken it into kind of 3 cycles. I like the point around the geo effect, which I think is understated sometimes, but I think it cannot be kind of overlooked. I do want to talk about, particular to Bloom, what is your investment philosophy? And the reason I ask that is because you've talked about not just the startup ecosystem changing, it's also how the venture funds have changed. The LPs that kind of you get the money from, that has also evolved. What is your investment philosophy when you look at new companies or new founders?
See, I think the foundations have not changed much.
Okay.
Right. I think the convictions have become stronger.
Mm-hmm.
So there's always in venture thrives on hype cycles because you want like an artificial speed and scale that you can't see in the normal world. So that can only happen when there's some disruption, either through technology today in AI. Prior to that, maybe electric vehicles. Prior to that, say, traditional digitized commerce, e-commerce, etc. So then everybody rushes into it. And, we sit, because you asked specifically about Bloom, we worry about, is the hype cycle game one for us?
Yep.
Because you're a tiny investor and suddenly everybody is raising hundreds of millions of dollars. How are you relevant?
Mm-hmm.
So it's not like we haven't made those bets. Like we were the first investors in Dunzo, but we lost the capital battle.
Mm-hmm.
You can't predict where the capital battle will go.
Okay.
And you're not in control of it as a small seed investor. So therefore it has reinforced our thinking that you can only play the battles you can control.
Sure.
Right. And which means you just pick great founders and great markets. So and that never changes about venture. It hasn't changed in 50 years, right? It just gets more stronger and it gets contextual. So in India, what does that mean? In India means that if you're winning on technology, usually that's not a moat in India.
Okay.
That's a moat globally. If you can build the best tech globally, then you should go and actually play in global markets.
Okay.
Because people pay you for that, for the technology advantage. In India, the guy says, how do I care what you've built under the hood? I'm only willing to pay so much. And so in India, it becomes about scaling through operational excellence in India. So you need a Danda mindset in someone who's building for India. So we judge founders very carefully on what's called founder market fit. Right? You can't have somebody who's built a company, sold to Cisco, and then come back and say, I will build a cool consumer app. You don't know anything about it. Right? And so similarly, you can't take a consumer guy and say, I will build to enterprise. I'm not saying there are not exceptions, but it's very rare. Right? And so we indulge, our orientation to what markets do we think can become very large systemically over a 8-10 year period. Because I'm not playing for next year's market. I'm playing for a 10 year ahead market.
Got it.
And so if I don't find founders who think that way, we generally don't back them. So what guides our philosophy is that can the founder imagine them building this for 10, 20 years? Of course, 20 things can go wrong.
Yeah.
But if that's not a starting point, definitely 20 things will go wrong very soon. And they will not be able to last that journey. And for us, we believe that if you want long-term value creation and, every time we lose a bet, which is your money goes to zero.
Yeah.
One of the things, it's sadly set in the early days. And one of the things I always think about is how much time I spent on that company. Not the money. The money starts whittling down on an Excel spreadsheet and says, the winners pay for the losers. But the time you can never get back. And of course, you write it off towards learning and you build a relationship. But oh my God, like that could have been spent somewhere else, right? Either with your kid or with another portfolio company. So then you become very conscious of the only real thing that a VC has is time and beyond the money, and you want to spend that very carefully. So you don't want to spend that with frivolous founders. So that's kind of been our thinking. And I think we believe that in India, market power is finally shifting to the entrepreneurs.
Okay.
Generally in India, the mindset is मैं पैसे दे रहा हूँ, मैं आपका बाप हूँ, right? Pardon the analogy, but I think that is moving towards entrepreneurs because entrepreneurs are saying, if I don't create wealth, where is this country going to go?
Sure.
Right? And that was there. It was there in the conglomerate thinking. It was there in state thinking, state enterprises. But it's now coming to startups.
Got it.
And which means that the ecosystem has to rally itself around serving them. So if you look at our approach, it's not about giving the capital, but how do you make the entrepreneur better? How do you make them grow faster? How do you have a platform service that allows them to grow faster? So that's on our thinking. And the last part is, I feel, globally, and this I haven't proven, I hope my next 5-7 years in venture I can prove this. Globally, in venture, there's a massive concentration of wealth creation and hits into a handful of companies.
Yeah.
So it's called the power law in venture, right? So 2 companies pay for the 10, and 10 companies out of 100 basically pay for the entire ecosystem.
Got it.
And in India, we have not seen that happen. We have not seen that scale happen yet. So, and in Indian corporates, basically, unidimensionally want to own everything. They don't want to partake. If they see tech, they want to buy it cheap. They want to compete with the startups.
Yeah.
So we have not seen this. I think what should happen is a proliferation of 500 to 1,000 great brand new companies in India. And venture should have backed most of them, right? I think days are gone of bootstrapping over 30 years. Venture has a role to play in any new business formation. So maybe we won't do steel, iron, energy, etc. But we will do anything that's new business models, new technology. So we would like to be pioneers of that. So we think of ourselves as, how can we not just fall prey to the power law, but think of every company as potentially a great hit. So that guides, all of this guides our investment philosophy.
Interesting. And thank you for that. There's a lot of questions coming in. Karthik, I know we have only 35 minutes.
I'll go very quickly.
Yeah, so I'll take some questions from the audience. And this actually, one of them gets to our conversation we were having earlier regarding riding waves.
Yeah.
A lot of VCs and even startups is about finding the right wave and timing it right. The question is, does India's environment reward short-term growth at the cost of long-term resilience?
No, I don't think so. I think everything catches up eventually.
It does.
It does. I think so. Because that, by the way, that phenomena can only work when there are hot buyers. And venture guys buying a hot round and giving you more capital has a limited sort of time window. So this game was played by Byju's and it failed badly.
Okay.
Right? Dunzo eventually ran out because the ecosystem has only so much money to give. And if they anoint somebody else as a winner and two big other balance sheets like Zomato and Swiggy are beginning to compete with you, and then Big Basket wants to get into the game and Amazon wants to get into the game and Flipkart wants to get into the game, there's no money left. So eventually you have to figure out that in the long term, whether it's the public markets, whether it's a M&A strategic, whether it's a financial majority, whether it's a strategic majority, everybody wants to know that the business makes sense inside their tent.
Okay.
They as an investor want to see another 5x growth. So they don't have fresh capital to give to keep burning beyond a point. So I think it's an equalizer. It's beginning to happen.
Okay.
We've seen a phenomenal shift. If you look at the 21 IPOs in tech, they actually were all loss-making predominantly. The 24, 25 are almost predominantly break-even or profit-making.
Okay.
The growth on those was 60, 70%. The growth on these are 20, 25%. So everybody is weighing out and balancing the growth of the growth equation with the profitability equation.
One question I have now, this is, I'm exercising the moderator's prerogative because there's a lot of questions here, but I have a question of my own as well, which is traditionally the view of the Indian market has been, I would say, quite dichotomous, right? Like either India is 1 billion consumers or it's a very tiny economy which doesn't have the power to pay. Like it's always been these two extremes. One of the things I like about Bloom is I think you've put out this report every year called the Indus Valley Report, which tries to break down India into different segments. And I think it's a particularly good view into India's formal economy. And for those of you who have not read it, I'd highly encourage you to read it. It's quite informative, a lot of good nuggets there. But maybe I think, Karthik, for kind of the, for our understanding here, if you could explain how you think about the Indian market in terms of segmentation. So that's number one. And number two is, from that segmentation, what are the lessons for founders and future entrepreneurs in terms of how do I approach this kind of domestic market?
Yeah, no, great question. I think Sajid Pai, my colleague, first drafted this even before I brought him into Bloom. We were colleagues at the Times Group, so there was some history there, and I was impressed by how he had broken the market down.
Yeah.
It got politicized this year. I don't know if you know.
Oh, in what way?
The Congress party took it and made it an issue. Because, the crude categorization of India into 1A, 2, 3.
Got it.
is something that can be used as a political tool as well. The reality is India is that. Like you want to be practical in how you frame the problem for venture capital. That's all we're trying to do.
Sure.
And so if you look at it from that context, you have to know whether you're building a luxury product which has the ability to service a high consumption wallet, or whether you're actually servicing a utility-like product which can be used by hundreds of millions of people. So when you ask me, that's basically India 1, 2, 3, right? So it's almost like on a per capita GDP, what do these segments look like? And there's 100 million, and there's 300 million, and there's the next billion. And so you have to be very careful about not trying to equate numbers blindly without knowing which segment you're playing in. So that was the idea. And therefore, you should know how quickly it is imperative to show unit margins and unit economics and get profitable, depending on which segment you're catering to.
Okay.
Right? So, because the long-term value of certain products for the first 100 million can be justified by acquiring at a silly cost, which is e-commerce, for example. Right? So you can spend whatever cost you need, whatever cross-subsidization you need to acquire, because once it's a habit, that household will shift 30 out of its 30,000 or 25,000 or 50,000 of its spend, 5,000, 8,000, 10,000 to you. And so you can make better margins, you can start selling better products, you can get into white label, you can get into private label. So that's the way to think about India 1. Whereas if you go to, if you go to my driver's family or my cook's family, you have to first give them means of income. You can't ask them to consume. What is there to consume? There's no expended disposable income. So what did they consume on? Classic roti, kapda, makan. Mobile, right? Anything that they can view on mobile in terms of data, in terms of free content, in terms of piecemeal content, or anything that can service them from an income perspective. That's all they can consume. So there you can't go and throw stupid money from a cost of acquisition perspective. Right? Because you're not going to make much money off them. So this myth that, like, unlike in the US where you can show 100 million daily actives and say, I can make great advertising money. Yeah, no advertiser is willing to pay for them. Which is why my old employer, my last employer in life, the Times of India, is still the most profitable, publication in the country, because that's the audiences that pay. The advertiser only wants to pay for that audience, not for the mass audiences that are listening to All India Radio. Right? So that is the way to think about the market. So we look at the entrepreneur's ability to come with a unique moat that allows them to get profitable with lesser money when they're catering to an India 3.
Okay.
And in India 1, we essentially ask them, is India a limiting factor? Today you have Forest Essentials in Paris and London. That's a luxury product. Lenskart today they're going IPO, so you'll see all the data. 2,700 stores, 700 of them already not in India. Right? So you can take an interesting model from India and go global today, but that's a very different mindset versus catering truly to Indian populations at India 2 and 3. So this is all we try to judge. Unit margins, profitability, how quickly can you get there? One founder put it very eloquently, right? He said in India, if you're selling to the masses and if you have a business model that requires more than 100 crores to get to profitability, there's something is wrong.
Interesting.
Right? If you shouldn't raise more capital than that to get to
Profitability. So on your segmentation of India 1, 2 and 3, one question I have is, do you think there's potential for the India 1 brands? Like you mentioned, some of them are trying to go global, and is that an aspiration that you see a lot of founders having, or is the India 1 market, which maybe 60 million, 100 million, whatever you count, is good enough for them?
It's enough. It's not necessarily good enough. I mean, Minimalist acquisition by Unilever shows that it was good in a particular category.
Yeah.
Like, skincare for India 1, got acquired for 350 million. Unilever didn't pay that for it to be static. They obviously expect to 5x or 10x that business.
Sure.
So that's how I see M&A logic work. So clearly, maybe Unilever thinks that it can be a global product. So in the hands of an acquirer or in the hands of the original founder, they have to start expanding that footprint.
Yeah.
That said, there are enough 1,000 crore brands in India. And that's a good yardstick. Now you tell me, can you build a 10,000 crore brand in India? It's very tough.
Okay.
Right? And so we have all these little yardsticks. Like, so if you're building commerce, depending on the commerce business you're building, if you're doing 50% margin, then you can be a 1,000 crore business in a very valuable business. If you're doing 20% margin, then you have to be a 2,500 crore business to get the same margin.
Got it.
So we evaluate most businesses by the capacity to generate gross margin, not necessarily by top line.
Got it.
And that's how every founder should think about these businesses that they've chosen.
I know so far a lot of the examples you've talked about are mainly B2C kind of customers in terms of targeting local Indian consumers. What are the lessons for B2B? And the reason I ask that is because that's again a very different market, and there I think the equation is flipped, where the Indian market, B2B market, is probably not as big, and you need to go global there, right?
B2B India is not for the faint-hearted.
Okay.
So it's an even tougher market than consumer.
Okay.
Because the Indian small business person is scrounging for every rupee.
Yeah.
Right? It's their livelihood. It's their substitute for a job. So we brag about having 50 million SMBs as entrepreneurs. That's because we couldn't create 50 million jobs, is the way I see it. Right? We are not a deep job market. And therefore people turn to entrepreneurship.
Sure.
Which means every rupee saved there is income for them. And so they're very, 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 very cost conscious, right? So if you don't give them value, or if you are not able to deliver value digitally at a very cheap price point, you're already off to a wrong start in India. So tough market, not impossible. Businesses like Tally, etc. have been built. Some of our founders try, but it's a very difficult distribution game.
Sure.
Selling to enterprises in India is finally picking up.
Okay.
But can you build a 1,000 crore business and be a hot, like Valley-like company with a few $100 million of revenue? Non-trivial. That's why you'll see Zoho today plastered in Indian billboards. Otherwise, for the first 15 years, they just sold overseas, right? We are seeing our first companies in India starting to see $10, $20 million of revenue from Indian enterprises. Okay. Even 50 million in the case of, let's say, Exotel. So, but it's a slow growth game because the sales cycles are long, adoption is slow, they don't pay as much. So therefore, a lot of Indian software and tech is technically, when we look at them and say, what gives you the courage to be in India? Why don't you go abroad? So the corollary is not easy either, by the way. So when you go overseas, it's not a switch of a button.
Okay.
Again, sales motions are very difficult. And if you're crossing the oceans and going to the US, then you better become American. In your thinking, in your playbooks, in your hiring, in your sales motions in the US, you can't run it like you run an Indian shop. Only the tech portion can be run that way.
Got it.
So everyone's learning that the hard way. And now we have Freshworks, which is, I think, on track to be 800 million of revenue. That's fantastic, right? But it took that 10 years of effort, and now that playbook is being adopted by more folks.
Okay.
So we are trying to judge all of this when we pick a play. It's not like we won't pick every play, but when we do pick, and we'll miss a few, but when we do pick, we are judging for all of these factors. Does the founder know that this is the playbook? If they're not capable, we don't want them to learn it on our dime.
Sure.
Sometimes we'll just wait 2 years for them to learn and come back.
Got it.
That's one advantage of now having become a slightly larger fund. I can afford to skip the seed action and not get too seduced by a low valuation and, this founder is hot. Just wait for 2 years and come back and pay the price. Because I don't want to pay that price on my watch, which we did in the first couple of funds.
Interesting. Please keep the questions coming. I can see them, so we'll get through them. I guess I wanted to shift from a little bit of the macro stuff that we've been talking about to now company level. And I wanted to talk about culture. And I was talking to Ishani, and she mentioned that Bloom was one of her earliest customers way back, even before Me Too and all these discussions around sexual harassment or safety in workplace and all these things happened. So I'm just curious, what was the reason for you picking culture, especially as an investor very early on? Seems a little bit kind of outside the zone, at least at the time.
I think most venture firms are sort of a reflection of early team and leadership. So it's personality driven, to be honest. I think everything that your life experiences shape you in a certain way. I might have been a very different person if I had worked in different places, lived in different places.
Sure.
So it's always it's difficult to articulate because it comes down to those individual choices, to be honest. And then if that foundation becomes very strong, then it's easier to build culture on top of that. So I think we the first thing that helped was we were a startup ourselves.
Okay.
Right. Nothing was given to us on a platter. So we hit up 600 doors to raise 100 crores. Right. 75 people said yes. So it's very humbling, right, in many levels. So when you go through that experience, I think you already relate to the founder that you're going to invest into. And I keep telling the founders, there's no way you could have worked as hard for the money as I have, right? So, and then I'm raising it just to give it to you. I'm not keeping any of it, or I'm not running my shop with it. I get like 2% of that to run my shop. Rest is going to you guys as an investor. So I think that on the other hand, therefore there was a healthy respect for early stage entrepreneurship, like the early stage entrepreneur. So not of late, I think now culture is well established, but even 5 years into the firm, I would correct the tonality of an email, right?
Okay.
Or what went to a founder. If somebody in my team went late for a call, they would be followed up by me. For me, the idea of respecting the entrepreneur, however stupid they might sound, however dumb their idea might look, point is they walk in through the door as an entrepreneur, right? And nobody gives them respect broadly initially in the early days.
Sure.
And that was our DNA. You're like one of the first people they meet. And you essentially, the idea is not to deflate their already low self-confidence, right? And their insecurities. And if you can continuously peg that, and maybe that was the sort of the biggest pillar in some sense. So, educational pedigree, man, woman, age, didn't matter, right? It didn't matter whether it was a 18-year-old kid pitching you. Ritesh Agrawal of OYO pitched us twice and we said no, but he pitched us as a college dropout. Or but he has memorable experiences of it, and so do we, right? And so did a 50-year-old, and we're not judging, right? And so I think that informs you on your core customer as the entrepreneur. And that informs you on how you want to treat people. And that becomes a reflection internally as well. I think that's how we grew. I mean, because we had thousands of these touch points before we grew to 10 people. Right? So I don't think the internal culture was built first. It came outward in because of the way we wanted to deal with our two primary customers, which is our investors and our entrepreneurs.
Interesting. There is one question here which I think you've alluded to in different points during your answers. One is, so the question is like, what are the traits you're looking for in a founder? Because you obviously I won't say go through, but you've met so many founders. You must be a really good judge at this point in terms of what it is that you're looking for. What are the traits? What are the signs?
I think we ask a lot of questions around how badly the founder wants to solve the problem.
Okay.
We think in all times of crisis in the journey, the one thing that keeps the founder going is that same mad desire to solve the problem.
Okay.
Co-founders leave, capital doesn't come in, you go through will I make the next month's payroll? Someone like a Dipinder has gone through it twice, right? So it's not like every founder goes through this, and you have to be healthily obsessed, even more obsessed than most others around wanting to solve problems. So for us, the route, and this is where I get a little disturbed when people catch new trends, because if you're catching a new technology and say, hey, I've been thinking about it all this time, the tech allows for it, like an AI, then I can understand. But if quick commerce is hot, so I want to do a business, and that just shakes me up a little.
Got it.
Right? Which means you never had really a thought around it. You're just catching a trend line. So that's what we look for in a founder, broadly, that obsession. Second is the same thing that we spoke about in a way about our own culture. So we don't gel with founders necessarily who don't exhibit that. If we don't see them treating, other people, whether that's there's this old test, right? People say you take somebody who's significant, you want to partner with, take them to a restaurant and see how they treat the staff, right? And if they fail that test, then they're not a great long-term partner for you. If you value that, so versions of that. That's not how I test my founders, but I'm saying versions of that is what we are looking for.
Got it.
Right? In how they deal with every interaction.
Yeah.
Because fundamentally, I think the CEO founder, usually the alpha male, alpha female, they are the ones driving 90% of the direction of the company. There might be multiple co-founders and there might be 5 team members, and all of that is great. But that person is what you hone in on. Because the company for the next 10 years is going to be run by this person. This idea of getting in professionals and having them run it, it's a TK. It might happen. It happened in a Bharat Pay. It happens somewhere else. It happens in the US. That's not what I'm banking on.
Understood.
I'm banking on whether that person can be the person I trust that will run a great company, hire, build great culture. So you're judging a lot of that. And then you're combining it with your market obsession and their market obsession. If I can't relate to the problem that they do, I don't play. And that doesn't mean they're a bad founder or it was a bad play. It's just that we didn't gel on that front.
Got it.
Yeah, but I think my belief now is that 80% of founder VC fits are made in this cultural fit.
Got it.
I don't think that is a mismatch usually. Yeah. So
How are we doing for time? I think we have. Okay, so I'll have one last question for you, which is basically, I see around Bangalore a lot of our, and when I say Bangalore, I mean the Indian startup ecosystem. A lot of our culture is almost borrowed a little bit from Silicon Valley.
yeah.
Everybody reads Hacker News. Everybody reads TechCrunch. We all know what's going on, and a lot of our role models are some of the founders in the US. Is there something that is different about kind of the Indian startup ethos that over this time that you think is different and not as well appreciated?
Yeah, I think I'm not a fan of the blind copy paste.
Sure.
I think there's a lot to learn from the Valley ecosystem in just their discipline, rigor, productivity, very objective. We had a situation where there was a founder conflict. We had to let someone go, mature company. The other co-founder took over. And the rest of the org just, rallied around, behaved very professionally. We don't see that necessarily. We're more emotional in the way we build. So that's a good part. I think we should learn that, it's not about, as much as I said in my prior answer that we index on that founder, the reality is we're in the business of building a business and making money for investors, and we're accountable to that. There, I think we have a lot to learn from the West in corporate governance and building in a firm, not being too emotionally attached to person A or person B in the firm. On everything else, I feel we're not a small economy. We're not like we have so much diversity and complexity within our own ecosystem that we shouldn't be looking to the West as a role model in how we build great startups. And that means that we can't be competing on salaries, common like stock compensation structures, etc., without having proven anything. So I feel India's time is coming, but I think we borrow conveniently, the entrepreneurs borrow and the VCs borrow conveniently to sell a certain narrative from the West, which is not necessarily applicable in the Indian context. It's not like India hasn't built great companies prior to venture capital, right? So there's something right about them. And those role models and those stories don't get told enough, and we don't borrow from them enough. So if you look at not to plug my own podcast, but if the reason I started a podcast was because I felt these Indian stories don't get told enough, and we don't role model enough.
Got it.
And we need to be able to say, how do you build a great public company? How do you build profitability? How does compounding really start after the 10th or 15th year of a business, right? Those stories get lost. Why? Because you're reading the hot news about a funding round, either in TechCrunch or in ET or wherever, and you're getting enamored by the fact that is a goal. That's not a goal. So I do believe in the paradigm that a great company should outlast its a great founder should outlast its investors. Right? I shouldn't be relevant after 10 years. I should sell my shares in the public market and I'll be out. And a great company should outlast its founders. Right? There's professionals who take over, like you have an Infosys or today or a Wipro today. And I would love to see that in India at scale. That to me is the final evolution point of a startup ecosystem.
Got it.
Because then those are the companies like in the US, Microsoft, Apple, Google, etc., which then start acquiring and spinning out talent. Right? And that's when, and they're cash rich, by the way. They don't borrow money anymore. Right? And they've been for 15 years. That's where we need to get to. And we need to build our own playbooks around that. Because we don't have a $1 trillion company and a $500 billion company, and we're not going to have one anytime soon. So you can't compound faster than the market will allow you. So if India's GDP is growing at a certain rate, and per capita for 90% of the people is growing at a very humble rate, the rich might be getting richer, but that's not true of 90%. Then you have to respect that and then compound the country and the ecosystem at that pace. right? And that's why I think we lose sight of everything. So we are benchmarking to a $10 billion outcome in the Valley. It's not easy to build that here.
Yeah.
That said, 25-30% of the Indian ecosystem, we have the brain power, and we are doing a new type of brain drain, I would say, where the founders are here, the capital is being provided here, the tech teams are here, but the market is there. And there you have to go head on and play the American playbook.
Yeah.
I don't think you can play a cute Indian playbook other than the cost structure. Yeah, but there also the people are already crying about lack of AI talent, etc., which means you have to then keep pace with the Americans. You can't say I sell cheap labor from Bangalore. That's not working anymore.
Got it.
So it's just not, I think, and the other thing, Bangalore specifically, I love a lot of things about Bangalore. I spend a lot of time here. But I think the thing about Bangalore is I think you can't underestimate how much, let's say, Delhi founders and their ability to generate profitable and IPOable companies, or the rock steadiness of a Bombay founder. These are better role models, if you ask me.
Got it.
How is Valley the better role model?
Got it.
Right? And we don't borrow enough from them. So, Dipinder obviously likes to snub Bangalore. So he came for the ET Awards and he said, I haven't been here in 7 years. He hasn't even landed in Bangalore. He's trying to make a point. So I think I've been here 17 times this year. So from Bombay. So I'm on an annual record-setting pace this year. So it's not like there's nothing to not love about the ecosystem here. But let's not get ahead of ourselves. Prove that you can build multiple $10 billion profitable companies in the public domain from here, and then talk. And then it's a different ecosystem, and playbook will naturally evolve. I don't think we'll need to borrow any more from the Valley.
Interesting. Lots more to do, but I think we run out of time, so we'll continue on the panel. But thank you so much, Karthik. It was a pleasure.
Hey, thanks.
Thank you.